Jai Hind friends, in today's video we are going to talk about one company which I believe can do very well in the future. It is currently a small cap company with a market cap of just 2000 crores and it belongs to the pharma sector. And pharma sector also we can say it's like a consistent sector because it manufactures things which are used on day-to-day basis. It's not something which is a cyclical in nature. So generally we have seen that the pharma sector grow at a consistent rate, consistent pace. So companies belonging from sectors like pharmaceutical, FMCG, IT, finance, generally the companies belonging from these sectors are the companies which provide us consistent return and in the longer run they keep on compounding our capital. So let's start. So here you can see the company is the leading domestic pharmaceutical formulation contract development and manufacturing organization. So what they do is it is like a contract manufacturing like we have for Dixon who manufactures electronic items for different company. This is a company which is kind of doing the same, but it is doing that in the pharmaceutical sector. It manufactures the medicine related ingredients or medicines also for the big pharma companies. Now coming on to the more details, you can see this company is amongst the top 5 players in the domestic pharmaceutical formulation. So although this company is very small in size, but it is one of the top 5 players. These are the business segment for this company. The CDMO segment gives them 81% of the revenue and 13% comes from domestic trade and over-the-counter brands. So they also manufacture their own drugs or medicines which are sold directly to the customer. And the remaining 4% comes from export. So they also do export in semi-regulated international market and selected regulated markets. So this company has 4 manufacturing facilities located in Dehradun, which is in Uttarakhand, and they have an installed capacity of 706 crore tablets, 504 crores pouch sachet, and 6.10 crore liquid bottle. So currently with their manufacturing facilities, this is the volume that they can produce or manufacture. And this company is also doing capex. So we will come to that in the later part of the video. Now coming on to the client. So here you can see this company provides CDMO services to 7 of the top 10 Indian formulation companies, including companies like Pfizer, Sanofi India, Cadila Healthcare, Amcure, Eris Life Sciences, Intas, Systopic, and various others. And here you can see the company is currently focusing to invest around 50 crores to do a capex to pour into high growth injectable business, leveraging their current CDMO customers. So you can see their focus is on growth, which is a good thing for the company as well as for the shareholders. So here are some positives for the company. Company is almost debt free. Company has delivered good profit growth of around 21% CAGR over the last 5 years. So here you can see the company name. Company name is Vinlas Biotech, currently trading at 961 rupees. Current PE is 32, which is not very high. If you look at the overall sector PE, I think this can still easily go up by around at least 40 to 45 PE. So if that happens, then it will show a good rally. And you can see that it is currently down by around 19% from its top, and market cap of the company, as I mentioned earlier, it is just 2000 crores. So it's a very small company right now, growing consistently. I think it has a potential to become at least 10x from here, but we'll have to wait and keep monitoring its results and performance. Now coming on to the report card of this company, you can see last quarter the results were good. Sales increased by 22%. Before that it was around 20%, and before that again it was around the same level, around 20 to 21%. So consistently this company has been growing. Now coming on to its yearly profit, you can see in March 2018 it was showing a profit of around 39, then 38, then 34, then 55, then it dipped. Then from March 23 onwards it has started going up. So in March 23 60 crores, then 24 78 crore, and now in the 12 trailing month it is coming approx 86 crores, and this is the operating profit that company gets from its core business. Now here you can see the sales growth. 5-year compounding growth has been 15%, 3-year 14, 12 trailing month it's a good sign, 25%. Profit growth has been very good, 5-year 21, 3-year 23, 12 trailing month 31%. CAGR growth also has been good. In last 3 years it has provided a CAGR return of 48%, which is great, and last 1 year it has gone up by 125%. Return on equity is also decent, around 12%. Coming on to its shareholding pattern, the promoter holds around 62.51% stake, 2% is held by FII, DI hold around 9.6, and remaining is held by public, which is 25.91. And currently the number of shareholders in this company is also not very high. It is just 45,000, which is a good sign, because wherever you see that the public is more into a company in the shareholding pattern, those are the companies that generally we should be avoiding. Not every time, but mostly, and share market is all game of percentage probability. The chances of a company giving exponential good return is where the public is less, and where the public you will see is maximum. Like if this will be reverse 62 or 70-80% with public, those are companies or shares generally which we should be avoiding. Now, recently you can see that there was a conference call done by the management. So we'll go quickly to the notes section where we'll have the summary of the conference call which happened. So here you can see all the highlights and everything. So we'll focus more on the important part, which is the capex, capacity expansion. So plant 2 capacity expansion is on track is what the management said, and it is expected to be fully operational in Q3 FY25. So what we can understand from this is that in Q3 FY25 there could be a new boost to the sales growth of the company. So the company future in terms of growth looks better. There was also acquisition done by the company in a facility in Silakwi, Dehradun, to meet the capacity expansion. So you can see the company is focusing on capacity expansion, and a company will only do this when it is expecting growth. Now let's look at the outlook and guidance from the management. So management remains optimistic about growth prospect despite low industry volume growth. And here you can see they are not providing any specific revenue guidance. However, management is saying they are confident in maintaining strong performance based on historical trends. So sometimes we have to read between the lines. So management is not clearly calling out that they will keep on growing, but they are putting efforts into capacity expansion. They are saying that the performance will be strong based on their past performance. It will be stronger. So we have to sometimes read between the lines and understand that things are looking good in the future. And they are saying that they are expecting the EBITDA margin to increase by 2 to 3%, which is again a good sign. Now coming on to their future plans. So they are looking to acquire dosage form expansions in areas such as ointments, soft gels, protein powder, and hormones. And management is open for both acquisition and organic growth strategies to enhance their capacities. So management is open about doing growth. It can be either acquiring a further small company or by doing organic growth, which is by growing their existing business. Now, if you want to do further research, you can also look at the PPT, which is uploaded. You can go through it. You will get more clarity on the company's business and how it is performing. And also you can go through the transcript. In this, you will find the conference call, the entire conference call script, what questions were asked, what were the answers given by the management. So you can get a sense of how the management is. Now coming on to the chart for this company, you can see the chart is only going in upward direction from here, this point. From 500, it has been going in an uptrend like this. Till 500, it was a little bit of consolidation which was happening, but post that you can see it is just going up, and it is going kind of in a straight line. It is not coming down with this line, and these type of stocks are called momentum stocks. When they keep going up, so what will happen, they will go up maybe like 20%, come down to their last support level, then again they'll go up. So in these kind of company or shares, the chances of getting more returns are higher. The company is good, it's growing at a good rate. The chart is also looking good, it's going in a good momentum right now. Right now it is available at a discount of 20% also. So if you are interested in this company, I would suggest to do your own research and study as well, and then only take any further decision.
Please remember, these were all my views. Please do your own research and study also before taking any buying and selling decision. And in case if you have any question, you can mention it in the comment section also. So bye for now. We'll meet in the next video. Thank you.